My name is Danny Schuffelberger, and I'm from Security Bank of Kansas City. I'm here this morning to teach some financial literacy for the Entrepreneur Week. Small business owners or people that just want to get started. What I do for the bank is I'm the business development manager, a senior vice president. I've been with the bank for 3.5 years. I've been with banking for over 20 years, but I've done everything from a teller position all the way up into business banking, and now currently I run the Treasury sales team. So we'll go over a couple of different topics about building credit, what credit does for your business, and then we'll talk about Treasury, which is my department as well. All right, so we'll go ahead and get started. I have a Q&A for the end for the audience. Feel free to catch me at the end and we can go over things too. And then for those who are on television, I did leave my business cards. Crystal is here from the bank as well. So my contact information is on the presentation deck, but we also have different means to get that contact information out to you all. All right, to get us started, I wanted to talk about building credit and really what that means as a business owner and how credit really gets you started into the banking industry. All right, so for our agenda, we'll go over, again, credit reporting and what that means for your business, the impact of personal credit. We'll also go through the difference between your personal credit and your business credit. How lenders evaluate your credit worthiness. So from a financial perspective, what that looks like for a business owner when we go through the process of applying for lending. Of course, the Treasury products, which I already mentioned, that's what myself and my team do. And then I'll introduce you to my team on the presentation deck. So to get us started, really, what is credit? So it's important for your businesses to really seek financial options. So lending is going to be a big thing. We also have different solutions that we can offer. This also helps you manage your debt and obligations. So whether that be to maybe a different company or to banks, we'll go over that as well. And then it's also really important to assess in reducing risk before entering into a relationship. So as your business grows, there's ways that you as a business owner can actually report credit and find out credit. So I'll explain a little bit more into that as well. So the definition of credit is really, from a bank perspective, is the ability to borrow money with a promise that it will be paid back. It's important for the financial stability and the success of individuals in business. A few things that I mentioned, and we'll dive really into all the ins and outs of personal and business credit, why it's important. So on this slide, just really wanted to highlight the difference between the personal and the business credit history that you'll be able to see on different reports. Your personal credit is a record of your use. That's going to be reported. So anything that you have maybe applied for personally, like a car loan, maybe you have an unsecured loan to help you, buy things maybe for your house. There's also credit cards. That's another form of lending that also has to do with your credit. And then for your business, it's really your business record of how sound your business is with the obligations that you're paying, how you're handling your debt and your financial obligations. So a little bit different between your personal and your business. The importance of credit for your business, from a bank perspective, this is one where we just really talk to our business clients a lot about is, you have access to financing. So as your business grows, you may need to have a loan to be able to help with, acquiring inventory, acquiring equipment. Maybe you're looking at purchasing your own building instead of actually just renting. And then also managing your working capital. So maybe you have money in the bank, but you don't want to touch that money. Maybe you need that for more of like a savings account or emergency purposes. So a bank is able to be there to help, with that in between to where we can extend funds to you to help. The personal and the business credit spectrum, I really like this slide because it really demonstrates the importance of your personal credit. So you see that on this portion. That's where you have your aspiring entrepreneurs, your business owners that are starting out. Banks look very heavily on your personal credit versus your business. But as your business grows, then you can establish more of that history of your business credit. So as your business grows, you'll be able to get more information as to, have you taken out lending before? Have you taken out maybe credit cards, things like that? There's different ways as your business grows that it relies more heavily on your business credit versus your personal. So, on this one, who's applied for loans in the past? What information was asked of you? What type of documentation? Did the lender explain the process and provide helpful tips? When you start looking into a banking relationship, those are some of the things that you want to ask yourself. Do I have a very good, strong working relationship with the lender, especially starting out? You may not know all the ins and outs of what it takes to establish the credit or what it takes to obtain, really good business credit. So having that conversation, having a lender be able to have the patience to really understand where you want to go with your business and then be able to explain things and then give you, helpful tips along the way. All right. So we'll go into the personal credit. So really, what does a personal credit report tell about you? It's really who you are as, a person, how much debt you have and how long you've had it. So again, do you have a car loan? Do you have multiple credit cards? Do you have a house loan? Are you consistently making those payments or are you delinquent? Those are the things that, a personal credit report will be able to tell you. How much credit you're using. So are you overextending yourself and just, borrowing a ton of money and you don't have the income to pay it back? Again, like I said, whether you make on time or late payments, and then if there's any negative information about existing public records, bankruptcy, foreclosure, those things are important for us, but also understanding the reason why maybe you filed a bankruptcy and then having that opportunity to clear that up on your credit report or understanding how long that stays on your credit report. There's 3 major credit card reporting agencies that banks use. You're probably familiar with these: Equifax, Experience, and TransUnion. They're all very common. A lot of banks may not report to all 3 of them, but we will be reporting to one of these for sure. To go into a little bit more information on your personal credit report, what it tells you, the slide, represents a great explanation on what we pull. So identifying information, your name, social security number, current address, credit history, your examples, your open credit accounts, your closed credit accounts. Again, all those things that we had mentioned, charge-offs, bankruptcy. Also, let's see. Oh, this is a very important one too. How many times you have had to inquire on your credit? So what that means, maybe you've gone and you've bought a car and they've run your credit multiple times. You are going to get dinged on that. Same with banks. There are certain things called a soft pull and a hard pull to where it will show up on your credit. That's another thing you can ask your bank. With me applying for this, is it going to be a hard pull to where it'll affect the credit? If it is, then something where you're finding out more information and making sure that this is a banking relationship that you want to move forward with, because all those little dings will add up and it will kind of be a red flag as to, okay, does this person are they out shopping, or are they in desperate need of funds? If they are in desperate need of funds, what's going on, with their personal and their business as they have it established now. Things that do not appear on a personal credit report: your checking and your savings account information. This will never show. Banks may ask for additional information like your bank statement, just to see what type of cash you have on hand. Your income, none of your places of employment are going to report how much you make. Medical history, this again goes back to the reasons of maybe what happened. Is there a charge off on an account? Was there bankruptcy? What was the reason? Was it, some type of medical reasoning? It won't have any of the race, gender, religion, any of that will not be reported. Of course, your driving record is not on there as well. And then your marital status. Just talking about personal credit scores, we'll dive into this a little bit, but really your credit score can range anywhere from the lower, I don't even know how low it goes. I think in 300s, and sometimes you may see somebody who doesn't have a credit score, and that doesn't necessarily mean that they're just, a horrible person paying back any debt. It just may mean that you're younger and you don't have any credit established. But I've seen them go all the way up to the 800s, which is an amazing score. So we'll go into that as well. All right, with the scoring, we do classify those as FICO score, your Advantage score. Again, your typical scores range from the 300 to the 850. Different things that factor your score. You may hear about, have you overextended your credit, how much credit lines you have, things like that. This is a really good representation of your FICO score for your personal. It shows like 35% of that score is weighted through your past payment history. 30% is your outstanding debt, how long you've had that credit, new applications for credit, and types of credit. Few things that are very important to know is some of these not only drive a heavier weight on your score, but things that you can do in order to drive that score up very easily. One thing, if you have like a line of credit and say it's $50,000, if you max that out at that $50,000 because you need that cash flow, well, sometimes that more than likely will bring down your credit score, because it shows that you are overextending the amount of credit lended to you. So you want to stay within about that 50% range. So if you need $50,000, you would want to aim for like $100,000. Outstanding debt, or how long that you've had credit, those are very important. I didn't know this until getting into banking, but when you open up like a credit card, one of the worst things that you can do for your credit score is to close out that credit card once you have it established. Because basically what happens is once you close that out, it erases all the history that you've had with that company. So I didn't know that. I think it's very helpful. Other things to keep in mind too is if you do have credit cards and you haven't like done a really small purchase, I always recommend do a small $5, $10, $50, whatever you can afford, and then immediately pay it off. All of that account history is going to show, and it will bump up your score. And again, we talked about the credit score, what's considered what's good, maybe poor credit. Again, the 300 all the way up to the 850. And again, if you are starting the process and you really haven't had any opportunity to apply, if you get a credit score and they say that it's, like a 0, that's where you just really need to start establishing that credit so you can start building that number up. All right, so there's 3 tips for business owners that we always like to recommend in the banking world. First, get your reports regularly. You are allowed one free poll every 12 months. Now on here, it does say, order a report every 4 months. It may cost you, but you would be able to catch if there's anything that was reported incorrectly. You can see if anybody applied for credit in your name, things like that. So we really do recommend do at least one poll a year. The second part is, again, review to make sure that your report is correctly. So once you get your report, go down it, make sure everything on that report belongs to you. If it doesn't belong to you, then we need to start the process of getting that fixed. So that's where it brings me to the third part, dispute any errors. And you want to do this as soon as possible. Work with a company, so like TransUnion, that Equifax, work with them directly. A few helpful tips: don't provide them with any original copies. You want to make sure that you save all that. Send in your disputes to the credit reporting agencies like I just mentioned, but then also make sure that you're getting a new credit report to show that that's been corrected. It's going to be really important, and you just want to make sure that you stay on top of it. There are ways that you can freeze your personal credit as well. So if you find out somebody pulled an inquiry on your credit, they can also, those 3 companies can also freeze that to where you can make sure that nobody's trying to take over your identity. All right. So when is personal credit history important for your business? It's always going to be important. I've been in banking, like I said, for over 20 years, and I have never really seen where personal credit isn't important. It will be important from when you establish your new business as you continue to grow. Again, different factors will change as your business ages, but it's going to be important from establishing that business, establishing that credit, starting to get the financing, and then as you continue to grow, have access to more of those funds. All right, so for the business credit report, so we talked a lot about the personal. We'll go into the business piece. Business credit reports, they're really just tools to evaluate the risk and where you are at with your business for the lending and the extended credit that maybe a bank will be able to offer you. Again, I hope I don't confuse anybody, but you have your personal, that is truly your personal information, and then your business, which is going to reflect truly off of the business activity of your business. So we talked about the 3 different reporting agencies on your personal. We have other ones for your business. Dun & Bradstreet, which you'll hear D&B a lot from banks. This is a way that banks are able to pull more like that background information. Equifax, same with the personal, focuses on how your business has managed like different business lines of credit or credit cards, things like that. And then Experian, that focuses on the credit information, again, from both lenders and maybe vendors that you've applied for, credit to be able to order supplies, things like that. Just like we demonstrated with the personal, here's, a snapshot of the business credit report that shows business names, any aliases. If you have filed in like Missouri for a fictitious name, that will pull up as well. Your DUNS number, companies that have maybe extended that credit to you. So it could be, a bank, could be those vendors that we had talked about. Again, your payment history. There is a risk score. It's a little bit different than your personal, but they do have some type of score rating. So it will really be able to tell a bank, are you more of a risky business owner from a financial lending perspective? There's a lot of things that go into it, but also too, a big portion of why banks use the business piece is, have you been in a lawsuit? Are you currently in a lawsuit? What do we think the results of that are going to be? Would that put your business in jeopardy of, paying back any type of obligation that you may have with a bank? Again, I'm just going to highlight, as much as we talk about how important it is for personal credit to make sure that the report is correct, make sure that your business report is correct. There's different ways, again, the Dun & Bradstreet you can access. There's other credit monitoring companies out there to be able to help build this. Some of those services are free. Some of them you may have to pay for, depending on what's really important for you. It may be worth, looking into. For different entities or industries that, we've mentioned, like a bank, having your business credit, it will help determine approval and terms for financing. Suppliers and shipping company, whether you're, purchasing goods, customers, determine if your company is legal entity and it's, a good standing business is going to be important. Insurance companies, some insurances will pull just like they do on your personal. All of these things are, a good reason to work on establishing good credit for your business. Won't spend much on here, but really the most important thing that you should have when you're establishing that business credit is make sure you have an EIN number. If you are a sole proprietor and you want to start establishing more of that larger corporation, look at, how your business is filed. Is it an LLC? Is it a corporation? Things like that. All these will be important to make sure that you establish off of a business versus your personal, what you use with your Social Security card. Making sure you decide whether you want to have the business credit report. Is there already a bank that you've applied with that are reporting on you? Those are important things to know. And then make sure, again, like I said, talk to your lender, talk to your suppliers, ask if they're reporting that kind of stuff, because not all banks do. I've worked with two pretty large organizations, one, of course, Security Bank, and right now they don't report on business credit. So not that it's a bad thing, but some banks do, some banks don't. Best practices, again, very similar to what you see on the personal side. Just maintain a healthy credit, pay your loans, pay your bills, make sure taxes, that's another thing. Taxes can report if you're past due. Maintain good relationships with your vendors, your suppliers, make sure that they're reporting that and all that information is correct. And then, separate your personal from your business. Sometimes if you're applying for credit or funds through your personal, that can hurt your personal and not benefit your business. So really having a lender or having somebody explain that difference and how either that can work for you or it can penalize you. Give you an example. I worked with a business client several years ago where they had their building in their personal name. And of course, it was a very large amount and they were overextended on their credit. So it was pulling their credit score down. Also, they had to pay personal property tax every year. So when we started talking to them, we looked at the full picture and said, okay, here's how it's affecting you on the personal side. If we refinance that and move that in the business name, here's how possibly it can benefit you. One of them, tax. I'm not an accountant, can't give tax advice, but we do know there's tax write-offs. So things like that, moving that into your business credit can certainly benefit you. And then it keeps everything from kind of commingling. So you can have your personal if something were to happen. That's why we have those LLCs set up, the limited liabilities. And then you have the obligation on your business. All right, so just a couple of different scenarios on how lenders, again, look at credit and underwriting. A lot of banks, they'll refer to the 5 C's, which I have those listed here. You have your capacity, which is your capacity to pay back that loan. What collateral do you have? Do you have sufficient collateral to help secure that loan? Your credit history. Conditions, that's really going to be like, for a good example, COVID. The condition of the economy was bad. We're going to look at that in those times of needs where it's like, is it realistic when a hotel has to shut down to 50% capacity? Are they going to be able to pay back those loans? It's something that a bank may weigh. They may decide maybe it's too risky. Character. So I talked about in your personal credit, things that don't pull, like your driving record, things like that. But banks can look at a character. So if there's, maybe DUI comes to mind, maybe if there's felony charges, maybe a misdemeanor, maybe a manslaughter charge, things like that, they may pull. And then a bank will, decide, is that something that we want to be a little bit more cautious on as well? Not to scare anybody on that, but I have seen it happen where a business owner, when she was in college, she had gotten into a car accident and ended up killing somebody. And it was a DUI incident. So the bank decided that, they weren't going to lend. It wasn't Security Bank, but it was an old bank that I used to work at. So again, those things don't pull, but they are important. So 2 different scenarios. Lender A. So again, starting out, you're using your personal credit. You're looking at, startup loans. We're going to consider all 5 of the different C's. Going to emphasize a lot on your personal credit and what collateral you have to secure that loan. Lender B, where you have a business that's maybe more established. That's where we're going to look at more of that non-traditional credit, business credit, to where a bank may rely more, just not so heavily on the 5 C's, but more on the information reported back on your business. And really, that is the piece that I have on the credit. I know I said that I would wait to do the Q&A at the end, but I thought maybe this would be a good opportunity for the ones that are here, if you have any questions, or if...
I do have questions. Yes. How can I check my business credit score? Is it just that DNB?
Yeah, that's going to be the most popular one. Mm-hmm.
And you kind of went over this, but I missed it. What percentage of credit card debt to the lending capacity is considered not overextended?
So,
in the presentation yesterday, it was 30%.
Okay.
You might have said 50. So
I did say 50. Yeah. I was always taught that it was 50. If you're looking at going over half of what your extended limit is, then that's where it's going to start dinging you. To be safe, you can look at that 30 to 50%. I've not really seen it in a negative impact at the 30 unless you have a whole lot of open credit lines or delinquent payments.
What is a DUNS number?
I will get that for you.
Oh, okay.
Yes.
And then what is non-traditional credit data?
Well, so that's going to be more of like some of this information that we're pulling like from the 5 C's, what's going on in the economic world right now. What's the situation of maybe the industry that your company is? So again, like the hotel during COVID or restaurants during COVID. Those are 2 industries that took a really, hard hit, making sure that they could only have so many people in, their business at a certain time. Everybody had to wear masks. What's that look like? Those are some of the non-traditional. You can even see things from, like I had mentioned about, like the character piece, some of the other non-traditional. So you can have like SBA lending for new businesses. We talk about in-house lending, which is more of what a bank is going to extend. And sometimes they can be more lenient on that instead of having like a true, box that they have to, check off for what SBA is looking for, things like that. Yeah.
And then just to clarify for Don's number, is that something that we're going to go over, or should I talk to you after?
If you want to talk to me after,
Okay.
yeah.
Thank you.
So you mentioned that personal credit can factor into business credit.
Yes.
Is that true if I progress from a sole prop to a sort of limited LLC, or where the owner is a different entity than the business?
Yes.
So then at that point, how does the whoever's looking at my credit distinguish between, like, decide that these people within that organization are going to be the personal credits that we're going to look at?
Yeah. So there's a lot of things that we do. So your personal is always going to like play a factor. So when you're starting to establish to taking it from that sole prop over to the other ones, there's things that we're going to look at as far as like who is going to be signing like a promissory note, who's going to be guarantor or being a guarantor on the loan. So who's going to be guaranteeing that they're going to be paying this back? Is it a spouse? So say you may have a husband and a wife. The wife doesn't have much to do with the business, but they want to use her as a co-signer. So all the personal piece can still bleed into the business side. So just depending on how you set up the loan, who you want to be responsible for that loan, depending on the type of business, they can all be set up different, like a non-for-profit. A lot of times you don't have somebody who's going to personally guarantee it. So you're going to look more on the business, and then how money is coming in for that non-for-profit business, things like that. Hopefully that made sense. Okay. All right, Crystal, do you have anything?
How would someone who is maybe trying to build up their credit, how can they start building up their credit?
So credit cards are a great way, a small line of credit. So again, working with a bank, trying to figure out, are they reporting just on personal? Again, the banks that I have worked at have been where it's personal. But again, we take in all those other factors that help make that decision. But small lines of credit are going to be big. If you purchase an equipment, or maybe your business is part of like driving truck, all those can help start establishing business credit. One thing that I have always, said, and I've told my team, when business owners feel like you're in a good place, you don't need lending, that's the best time to apply for lending. Because when you turn into a situation where that's where you need it, sometimes those things can affect your credit. You could be in a bad situation, things that are truly unforeseen, but the best time to apply for credit is when you don't need it. Yes.
So as a small business just starting out, and I'm looking for ways to either just build credit, or I'm just trying to get my first spots of credit, are there any red flags or specific scams out there that I should be wary of, watch for, that would promise, easy lines of credit, but it's predatory, or it's just going to be bad in the long run for me?
Yes. So some of those quick payout loans, some of those businesses, they're in business because they're lending to really a lot of times people that can't get traditional credit. But what happens is they're not necessarily scamming you, but they're going to have such a high interest rate that it's going to be hard for a business owner to repay that debt back, which again, if you're delinquent on your payments, then it's going to hurt your credit. So my recommendation is start interviewing banks. Work with a bank that really wants to partner with you, grow your relationship and grow your business. Somebody who's going to sit and listen. And then we can start giving advice on, let's start with a small, line for business credit card. Let's start with maybe a small revolving line. It can be unsecured. It could be secured. Starting small and then allowing that to grow is my recommendation for somebody who's starting out, for sure. But your relationship with your bank is going to be key. Good questions. Okay. We good to continue? Okay. All right. So The part that I have a lot of fun with is Treasury Products, which again, I run the Treasury team on the security bank commercial side. So this is a passion of mine, but really what Treasury Management is we offer products and solution for business owners such as yourself to help manage payments. It's going to be to where we'll offer different tools to be able to run your business more effectively, where you're not just managing your day-to-day activities in front of a computer. We have ways that can be more handy for you, also ways that can keep you from out of the bank. Not saying we don't want you all to come and visit us, because we do love our clients, but we understand as a business owner, your time is precious. So we have different ways that we can help provide these solutions to effectively operate your business. Different products, we have our ACH origination, and we have merchant processing, online wires, positive pay, express deposit, lockbox, and then of course business credit cards, and we'll go into depth on each one. For your ACH, really this is where an organization can create electronic payments. So one thing that you can think a lot of is if you're paying vendors or suppliers, you can send that out electronically instead of writing checks. For some of the smaller businesses, we do payroll services through our ACH. Those are two really common ones. But basically, you're working with your bank to submit a file, and then we submit that out on behalf of you. And then nobody has a check in hand with your account number. So like on this slide, it talks about the secure piece of it. It's an effective way to manage your cash flow. So what I mean by that is it's more timely. So if you're sending checks in the mail, we all know how sometimes the mail service can be unpredictable. This is very fast. You normally have either the same day or like a 2-day turnaround time for your ACH payments to go through. It's one of the most effective ways that we transmit funds. So out of all the different treasury products that a bank offers, we actually sell the most with our ACH. Again, people that we recommend is any of our customers that make payments to vendors, direct deposits for the payroll. If you're making business-to-business payments, those are good. Tax payments, reoccurring. So also with ACH, it's not just you have to send out money, you can collect money. So say you're maybe like a daycare provider and you want to be able to offer a different payment source for your clients instead of like a check or a credit card. We can set up to where you're accepting ACH payments. So you would, basically fill out like a consent form that they would sign. They would provide their information, and then we would collect that money. Merchant processing. So this is your credit card system, like your point of sale. We, have a whole suite of different point of sale systems that we can offer, but any customers that are accepting any type of debit or credit, so through MasterCard, Visa, American Express, Discover, those you would definitely want to use some type of point of sale or merchant processing. When I had mentioned we have a whole suite of different point of sales, Clover is a really big one that we sell. We partner with a local merchant processing company here, but we are your direct go-to person to be able to set these things up, talk to you, be able to do like a demo of the different products and point of sales that we can offer. And it can be anywhere from like a small business to where you're not taking a whole lot. We have solutions for that. And then we also have other businesses that we support that are taking very large volumes of credit card processing. Again, we recommend this to anybody that's taking credit or debit cards. It doesn't matter the size of the business. I'm sure that we do have a solution for you. One thing to really kind of figure out if you are doing some shopping is when you're interviewing a bank, also is ask them, do you have your in-house merchant processing through your bank? Do you partner with somebody? You'll hear of like First Data. That's a very big company. We also have opportunity to process through them as well. Our company is local, but we do all of the in-house stuff ourselves. So we do the credit card, we submit it to our partner, they do the underwriting, but really you're more face-to-face with, bank employees that you know and are comfortable with. I had mentioned online wires. So this is really big. So if we have a client that are sending reoccurring wires where you're going into a banking center and you're sending out wires, whether they're international or domestic, if you want the convenience of being able to do that at your fingertips in your office, this is a great solution. We offer this to where it's online, it's more secure. I say it's more secure because a lot of times you'll have dual control. So if you have one person that's responsible for sending out that money, then you can have somebody else designated to be that approver. Again, we recommend it for anybody who is sending, payments. This is really important if you need a solution to send same day. Again, ACH may be an option. Some banks don't offer same day ACH, but wires, we can make sure that it gets out the same day, as long as we're before the cutoff. All right, fraud prevention. This is something that we see all the time as a bank. I'm sure you all hear about it as well as a business owner. You may have even had like a debit card compromised or a checking account number. We offer different products and tools to help combat fraud. We have check positive pay and we have ACH positive pay. Check positive pay is, really to where if you're issuing out checks, this is an opportunity for us to be able to have information on your check and be able to cross-reference that. And then you can go in and work any exceptions, which means maybe it's a check that has popped out to where our system doesn't recognize from the issue or the information that you have given on what you've issued out. The computer on our end really talks to the file that you're sending us, and then it alerts you to be able to go in and say, I want this paid or I want it declined. So some of those things that we're looking for is the check number, the amount, the date, the payee. If any of those don't match, then it will pop out again like that exception for you as a business owner to be able to go in and make that decision to pay or return. I would say I would recommend this to anybody who writes checks, regardless if it's a large number or a small number. Check fraud is on a huge rise. It's nothing new. We see it over and over, but it's just more and more like an everyday occurrence that we're trying to fight. ACH positive pay. So again, those clients that utilize ACH, this is a way that we can also track from the ACH perspective. Of course, we're not looking for the number of the check, but there's ways that we're also looking, is it a company that you have submitted out? Is it somebody that's familiar? Is it an amount that you had put in? Those are the things that our computer will also cross-reference with the file that you submit in. This was from our training department, which I absolutely love this page. Hopefully you all can see it. The Scammy Snapshot of 2023 is really just where we're seeing so much fraud. 2.6 million fraud reports, 10 billion a reported loss. When you compare this to last year, it just continues to grow. If you take a look at some of the statistics out there for fraud, I mean, that's where you can really start protecting yourself. Joey, you had asked about scams. This is another way, with the ACH and the check positive pay that you can help avoid some of that, because we've seen it where some people, they'll act like they're maybe your vendor and say, hey, can you send me this? Now, if you enter that information, of course, we're not going to catch it. But if you have that red flag or you feel like it's different and something where your company is changing something and, you know, it's just all red flags. And then we can start helping do some of that research too. Is this legitimate? You know, we can help give business client tips and things to look out for. But the fraud prevention, you know, with the positive pay, those are great ways if you're moving money out of your account to definitely utilize. So again, we recommend it. People who are writing checks, clients who payees are likely to come to Security Bank to cash. So this is important too, again, for like that payroll. When you have somebody presenting a check, you know, you're leaving it up to a human touch to be able to, you know, make the best educational, you know, decision on, is this fraudulent or not? And if somebody has had an opportunity to maybe get a hold of your checks, they can duplicate that. So again, all these tools will help prevent fraud. Express deposit. So another name you may hear is remote deposit capture. It's really the same thing. If you're accepting a lot of checks from either your consumers or maybe some of your suppliers or vendors, and you don't want to go to the bank all the time, this is a great opportunity to take advantage of the express deposit machine. It's really just a scanner that sits on your desk and you're running it through like a teller would. So it's very convenient for clients and it's low cost. Yeah, we recommend it for clients, again, if you're taking a lot of those checks, but also if you don't want to make that trip, if you're not close. We do have some business clients that are out of state that take advantage of this because they just can't get to a banking center. Lockbox, I won't spend a lot of time on this. Really, this is where a bank can have means to offer a PO box that is controlled by the bank. So if you think of like large medical or hospitals that are accepting payments, maybe you need to have where somebody is not handling those because of HIPAA. Those are great ways that we can offer to where it's more secure. The bank is handling it. You're taking that office person out. Other places we've used like dealerships where they will send in payments. So the benefit of this is not having a full-time designated person. It's the bank. These are for more of our larger business clients, just because it is more expensive. You're handling a lot of, you know, checks that are coming through, and you need more of like a designated place for somebody like your consumers to send those payments to. Business credit cards. I know that we've mentioned this. You know, this is part of our Treasury suite. This is a new program that we just opened up at Security Bank to where we do all of our in-house. One great benefit of that is you have a designated team to be that customer support, just like we do on our Treasury side. Some of your larger banks, I'm not trying to sell the bank, but this is important to where when you deal with some of those larger banks, you kind of get lost in the mix. You may be calling a 1-800 number and it goes to maybe a different country. You know, at Security Bank with a smaller in-house program, you have like the same 6 people you're going to talk to every time you call. But we do recommend that, you know, for businesses starting out, maybe even businesses that just want to be able to offer this to their employees. So again, we talk about that truck driving company. If you have a whole bunch of employees going out and they need a way to purchase gas, business credit cards is a great solution to be able to offer them. And this is the Security Bank Treasury team. And of course, you have myself, but then you have Brandon Watson. He is newer to the team. He's been here for about 2 years. He's in the central region. Cassandra has been with the bank, I think, for almost 30 years. She is the South region, so she's at our 95th Street location. Kelly Spencer, she's the East region in Lee Summit. She's also been with the bank, I think, for 30 plus years. And then Susan Caltharp, she's our Northwest region Treasury officer. She's been with the bank for about 2.5 years, but she comes with almost 40 years of banking experience. So among our team, we have, I think it was over 100 years of banking experience. So that really wraps up my presentation. I hope all of you have enjoyed. I will have the presentation deck that I can send out to anybody that would like access to it. I have my business cards here as well. You also have the contact information that I just showed you. If you want to reach out to any of the Treasury officers, we're here to help. We don't do the lending side, but we work with the commercial department and lenders every day. So if you have questions or you want to see if there's, a relationship that we can establish, I'd love to introduce you not only to our lenders, but we have our retail team, which is the Banking Center Associates as well. All right.
This might be a repeat of a question, but so to establish whether I have a business credit score at all, it's just still D&D, right?
Yeah.
Just go, they would have it.
Yeah.
Oh, or not have it. Okay,
Mhm.
cool, great.
Okay.
I have a question for you.
Yes.
Out of all the products you just talked about, for those who are truly just starting out their business, have no treasure products whatsoever from anywhere, what do you think is the key one out of all of those that would be a starting point? And if I was going to go to a bank to start paying for a treasury product relationship, this is the place I could start. This is the product.
So I would do the fraud prevention tools. I would say there's 3.
Okay.
So I would do the fraud because you want to protect yourself. It's almost like an insurance policy, that you're protecting. Businesses do have a shorter window to dispute transactions that are going through. It's a much shorter window than what consumers do. So that's why I would say definitely the positive pay. If you're writing checks, get away from checks. Use your ACH. It can be scary at first, but once you get the hang of it, it's super easy. And we have a team that does the training. They can help you. You can call in for assistance. Again, it's more secure. So not only beefing it up with your fraud, but this eliminates your checks. And then I would say merchant processing. Yeah. Good question. Was it?
Yeah. Any more questions?
All right.